Really, if the Feds continue to increase interest rates, we are going to definitely see a lot of banks failing. A lot of banks are failing, and it's really concerning. Credit Suisse Bank in Switzerland is at a point of really collapsing, and which is concerning. Credit Suisse is a tier 1 bank in Switzerland. It has been in existence for over 100 years. And now UBS Bank have to come in to save the day by purchasing the bank at $3.25 billion, which is 60% less than what the bank is worth. I believe the bank was worth at $90 million, and now it's being purchased at $3.5 billion. And it's the same thing that is happening with First Republic Bank, with stocks dropping less than 50%. And the CEO of Chase Bank is in conversation with other big banks to see how they'll be able to come in and rescue the bank from collapsing, so the bank will be able to stay afloat. Really, if the Feds continue to increase interest rates, we are going to definitely see a lot of banks failing, because the increase in interest rates definitely brings down the value of bonds, and which affects investment. And that is what happened with SVB Bank. And the other reason is bank runs, when there are a lot of deposits that the bank is unable to meet. Now, keep in mind that the banks are in business to make money. It's all about the profits. You deposit your money with the bank, they take your money and they put it in their investment. According to the fractional reserve banking regulation, the banks are allowed to use 100% of the deposit you give to them. So before, they were allowed to keep certain amount available for deposit, but now that has changed. The bank are allowed to use 100% of your deposit into investment. And the advice is really keep your money with multiple banks, especially if you have more than $250,000 cash, because according to the FDIC, you are only insured up to $250,000. So let's say you have $750,000 on you. Go with 3 banks, open 3 different accounts, and put $250,000 in each account. In that case, you are covered. Should anything happen to that bank and the bank is about to collapse, at least you know that your money is going to be insured. Though, yes, should it happen, it's not going to be like you can go there the next day and, request for that withdrawal and the bank would be able to give it to you. It's a process that comes with it, but at least you are safeguarded and you are certain that should anything happen with that bank, that your deposit with that bank, the government is going to insure that for you. And if possible, go with the big fives, with your Chase, Wells Fargo, Bank of America, U.S. Bank, Citibank. These are tier 1 banks that it's impossible for them to fail. There's no way that the government would allow them to fail. With these regional and small banks, it's easy for them to fail compared to these large banks that have massive assets in investment. You're talking about trillions of dollars in assets, and there's no way that the government will allow such banks to fail, because it's really going to crush the economy. Now, you can also bank with credit union. I've not heard a lot of people talk about credit union, and these are the reasons why banking with credit unions are safe and sound, because credit union operate under a different model compared to your traditional bank, because credit union focuses on their members rather than generating profits for their stakeholders. All right, so credit unions are run by the members instead of stakeholders. So credit unions are safe because they are not in for the profit. They are in to do the right thing for their members. Whereas with your average traditional bank, it's about the money, it's about a profit, it's about what can be made in return for the deposit you keep with them. Credit unions are subject to stringent oversight and regulations by the National Credit Union Association, which is an independent agency. And what that basically means is that this organization or this agency is free of government control or federal government control. The government cannot come in, or the federal government cannot come in to dictate what this agency does. So this agency, which is the National Credit Union Association, ensure that credit unions are adhering to the strict regulations and the policies that have been set. The NCUA ensures that credit unions are operated safely and also in a sound manner by monitoring their performance, conducting examinations, to ensure that they adhere, to the regulations that have been set for them. The other thing is that credit unions are also insured by the FDIC up to $250, just like your, regular traditional bank. Should anything happen with any credit union that you bank with, you can also be sure to get your deposit up to $250. All right. But the difference between the traditional bank and the credit union is that credit unions are not run by stakeholders. They are not in for the profit, unlike your U.S. bank, unlike your Signature Bank, unlike your SVB Bank that are in for the profit. So your deposit are invested into portfolios so the bank will be able to make returns. All right. So that's really the difference. If you want to bank, you can consider banking with either the top tier banks, the top 1 tier banks, which would be the 5 main big banks, which would be Chase Bank, Wells Fargo, Bank of America, U.S. Bank, or even Citibank. Or you can also, on the other hand, consider banking with the credit union, which are not-for-profit organization.